Top 7 dividend stocks in Warren Buffett portfolio to buy. Investing in dividend stocks is a tried and true technique for accumulating wealth and producing a consistent source of income. Only a few investors exemplify the ideas of disciplined investment more than Warren Buffett, Berkshire Hathaway's iconic chairman and CEO. Buffett, known for his thorough selection process and long-term perspective, has created a portfolio that represents stability and growth. In this video, we look at the top 7 dividend companies in Warren Buffett's portfolio. We provide a thorough overview of each company's history, dividend performance, and why these stocks are worth considering for your investment plan. Number 1. Apple Inc., AAPL. Historical background. Apple went public in 1980, and its stock has become a staple in many investment portfolios because of its constant and spectacular growth trajectory. Apple restarted dividend payments after a lengthy gap in 2012, signaling a critical turning point in its financial policy. Since then, the company's dividend distributions have steadily climbed, showing its solid cash flow and commitment to repaying money to shareholders. As of 2024, Apple's dividend yield, although tiny, remains consistent and demonstrates the company's financial soundness. Annual dividend yield of Apple stands at 0.46%. Apple's strong market position, wide product portfolio, and inventive ecosystem make it an appealing investment opportunity. The company's capacity to produce significant free cash flow supports current dividend payments and possible growth. Furthermore, Apple's ongoing investment in research and development keeps it at the forefront of technical innovation. Apple stands out as a robust and appealing alternative for investors seeking a mix of growth and income, thanks to its track record of success and dedication to shareholder returns. Number 2. Coca-Cola Company, KO. Coca-Cola was founded in 1886 by John Pemberton and has since become a worldwide icon and one of the most known brands in the world. The firm went public in 1919 and has since grown its product portfolio to include a variety of drinks in addition to its signature soda, catering to a broad range of customer tastes. Coca-Cola has long been a prominent beverage corporation, continually innovating and adapting to market changes while keeping its iconic appeal. Coca-Cola is well known for its commitment to return value to shareholders. It has paid dividends consistently since 1920 and has grown its payout for over 50 years in a row, giving it a coveted place among the payout aristocrats. Coca-Cola's steady dividend increase underscores its strong financial health and commitment to rewarding shareholders. Coca-Cola's dividend yield remains appealing in 2024, thanks to its steady income sources and sustained profitability. Coca-Cola's lengthy history of consistent dividend payments makes it an excellent pick for income-oriented investors. Annual dividend yield of Coca-Cola stands at 3.06%. Coca-Cola's enormous worldwide distribution network and excellent brand portfolio are important drivers of its long-term success. The company's ability to adapt to changing customer tastes, such as the rising desire for healthier beverage alternatives, assures its continued relevance in a changing industry. Coca-Cola's defensive business strategy, which is defined by consistent earnings and stability during economic downturns, makes it a dependable dividend investment. Coca-Cola provides a good balance of safety and growth potential for cautious investors looking for consistent dividend distributions. Its robust track record and strategic objectives position it well for future success, making it an excellent addition to any dividend-focused portfolio. Number 3. Chevron Corporation, CVX. Chevron Corporation, one of the world's biggest integrated energy businesses, was founded in 1879 as Pacific Coast Oil Company. The firm expanded via a succession of mergers, acquisitions, and rebranding attempts until it was renamed Chevron Corporation in 1984. Chevron's enormous activities include the oil, natural gas, and renewable energy sectors, making it a prominent participant in the worldwide energy industry. Chevron has a strong track record of paying and growing dividends, with a current string of yearly increases spanning 3 decades. This commitment to dividend growth shows the company's strong financial position and capacity to produce significant cash flow even during times of oil price volatility. Chevron's dividend yield is high thanks to its prudent financial management and intelligent resource use. Annual dividend yield of Chevron stands at 4.15%. Chevron's wide energy portfolio, along with significant investments in renewable energy, positions the company well for future development. The corporation is not just focused on conventional fossil fuels, but is also making substantial progress in the renewable energy industry to ensure long-term viability. Chevron's conservative capital allocation and strong commitment to shareholder returns make it an appealing option for dividend investors, especially those seeking exposure to the energy sector. This combination of historical strength, financial discipline, and forward-thinking strategy emphasizes Chevron's potential as a sound investment. Number 4. Johnson & Johnson, J&J. Robert Wood Johnson and his brothers formed Johnson & Johnson in 1886, and it has since grown to become one of the world's greatest healthcare companies. The company's vast product line includes medicines, medical equipment, and consumer health goods, and it has a long track record of innovation and quality. Johnson & Johnson has an outstanding record of dividend payments, with over 50 consecutive years of growth, making it another dividend aristocrat. The company's dividend yield is continuously high, thanks to its diverse income sources and steady profit growth. Annual dividend yield of J&J stands at 3.4%. Johnson & Johnson's diverse business strategy and expertise in the healthcare industry create a solid platform for future dividend payments. Its excellent financial sheet and dedication to R&D guarantee long-term growth potential, making it an appealing option for dividend-focused portfolios. Number 5. Procter & Gamble Company, PG. William Procter and James Gamble founded Procter & Gamble, P&G, in 1837, and it has since become a worldwide consumer products leader. The company's diverse portfolio includes well-known brands such as Tide, Pampers, and Gillette, making it a household name all over the globe. Procter & Gamble has a long history of dividend payments, dating back to over 130 years and including more than 6 decades of continuous increases. The dividend yield is high, indicating that the firm generates a lot of cash and operates well. Annual dividend yield of P&G stands at 2.5%. P&G's stable business strategy, varied product choices, and high brand identity assure consistent demand for its goods. Its emphasis on innovation and cost control ensures sustained dividend growth, making it a dependable option for income investors. Number 6. American Express Company, AXP. American Express was founded in 1850 as an express mail firm. It has since grown to become a significant worldwide financial services corporation known for its credit card, charge card, and travel services. The company's reputation for exceptional customer service and special advantages has helped it cultivate a devoted following. American Express has continually raised its dividend in recent years, reflecting its solid financial performance and strategic expansion objectives. While its dividend yield is smaller than some other equities, the company's dedication to shareholder returns remains unwavering. Annual dividend yield of AMEX stands at 1.2%. American Express's strong market position is underpinned by its emphasis on wealthy clientele and strategic partnerships. Its strong profit growth and cautious financial management make it an excellent pick for investors looking for both capital gains and dividend income. Number 7. Verizon Communications, Incorporated, VZ. Verizon Communications was founded in 2000 by the combination of Bell Atlantic and GTE, two of the biggest telecommunication firms in the United States. Verizon has subsequently become a telecom sector leader, offering cellular, internet, and business services. Verizon is well known for its substantial dividend distributions, which are backed by consistent cash flow from the subscription-based services. The firm has a lengthy history of steady dividend payments, and its yield is especially appealing to income-oriented investors. Annual dividend yield of Verizon stands at 6.4%. Verizon's strong position in the telecommunications market, paired with its investments in 5G technology, sets it up for future success. Its consistent dividend payments and high cash creation make it an intriguing option for investors looking for a regular income. Warren Buffett's portfolio demonstrates the potential of investing in high-quality dividend equities. The 7 firms mentioned in this article, Apple, Coca-Cola, Chevron, Johnson & Johnson, Procter & Gamble, American Express, and Verizon, all provide a distinct combination of stability, growth, and consistent revenue. By carefully picking and keeping these companies, investors may replicate Buffett's technique and create a dependable, income-generating portfolio that will withstand the test of time. Whether you are an experienced investor or just getting started, these dividend stocks give a strong basis for attaining your financial objectives. Thanks for watching. If you have any questions, feel free to drop them in the comment section and we will be happy to answer them.